Hello, welcome to the European Open briefing for Thursday, May the 11th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So today's main focus is the Bank of England's latest monetary policy meeting. The bank will also be publishing its latest quarterly inflation report, which will include the rate outlook and GDP and inflation forecasts. And there's some speculation that the Bank of England might take a more hawkish stance, given that inflation has surged past its 2% inflation target. And it will also be followed by a press conference by the government Mark Carney, and that's why today's events have been dubbed Super Thursday, and the pound is steady ahead of that. But we also have overall improved risk sentiment this morning, helped in part by higher oil prices, which helped energy stocks. Oil surged by 3% yesterday after the latest inventory data showed US crude stocks fell by the most so far this year. The dollar is also doing well, mainly against the yen, and that's down to growing optimism about the state of the US economy and growing bets that the Fed will raise rates again in June. The dollar hit a fresh 8-week high earlier today versus the Japanese yen. And the other main mover this morning is the New Zealand dollar, which hasn't benefited from the risk sentiment as it plunged sharply after the Reserve Bank of New Zealand failed to give a more hawkish tone in its latest monetary policy statement, and that hurt the Kiwi. But let's start with the dollar. Here in the chart in purple, we can see the dollar rose to 114.36. That's an 8-week high against the yen. US Treasury yields, you can see, have been supporting the dollar against the yen. US Treasury yields hit a 6-week high of 2.416% yesterday. That's the 10-year yield. On the growing optimism about the US economy and the fact that the Fed is looking increasingly likely that they will raise rates for the second time this year in June. But we did have strong data out of Japan this morning. The current account came in the surplus was much higher than expected. So that's been supporting the yen somewhat, and that's why the dollar has fallen back a little bit from its earlier highs. We also had another Fed speaker, actually Eric Rosengren, had spoken again a couple of days ago, and he's been one of the more hawkish members of the FOMC. Although he's not a voting member, he's an influential member of the FOMC, and he supports 4 rate increases in 2017, saying there should be 3 additional rate hikes this year. But let's move on to the Kiwi now. We can see that big drop early today at the start of the Asian trading. It plunged by 1.8% against the US dollar to an 11 months low of 0.6816, and that's because many analysts were expecting the Reserve Bank of New Zealand to be more hawkish, given that inflation in New Zealand rose above 2% in the first quarter. But despite that, the RBNZ is saying that this pickup is down to temporary effects, and it says that house prices have been slowing and wage growth is moderate. So it's not as confident about inflation as many were expecting the RBNZ to be. And the RBNZ still expects to start raising rates in late 2019. Many market participants were expecting this date to be brought forward, so that did hurt the Kiwi, although it has recovered partially to around 0.6860 at the start of European trading. Moving on to the pound, because it's going to be a big day for sterling given this Bank of England Super Thursday. again, with the Bank of England, many analysts are expecting the bank to become more hawkish. We already saw there's been some dissent already within the Monetary Policy Committee, with 1 or 2 MPC members supporting a rate hike soon. So it's going to be interesting to see whether there's going to be more members of the MPC arguing for a rate hike. And of course, this comes at a time when UK growth is actually slowing, mainly due to consumer spending not being as strong as expected in the first quarters of the year, while at the same time inflation has surged above 2%, and that's mainly down to the fact that we saw a big drop in the value of the pound after the Brexit referendum. The pound is currently trading around 1.2940. Mark Carney, the governor, will give a press conference around 12:30 UK time, so it's going to be interesting to see whether the bank will maintain a neutral bias or whether they will start sounding more concerned about inflation. And if they do that, we will likely see the pound jump higher. Let's have a quick mention about the euro, because ECB President Mario Draghi did speak yesterday in the Dutch Parliament. Although there has been a lot of talk about when the ECB will begin to start tapering or start tightening monetary policy, he yesterday refused to give any ground. He actually said that it was too early to declare success about the ECB's policies in boosting inflation and Eurozone growth. Although he was more upbeat, he said downside risks to the Eurozone economy have diminished further. Underlying inflation pressures remain subdued, so no change in Draghi's stance there since the last ECB meeting. The euro did touch 1.5-week low 1.0851 against the US dollar. It has edged slightly outwards this morning to around 1.080. And the euro does seem to be struggling to find fresh upwards momentum, and Draghi failed to do that yesterday. So it's going to be interesting to see whether or not the euro will be able to maintain its recent gains prior to the French elections. Moving on to oil now, because we did have the US inventories yesterday. The latest numbers out of the US Energy Department showed that crude stocks in the US saw the biggest drop so far this year. They fell by 5.25 million versus expectations of a 1.59 million drop in the week starting May the 1st. We saw WTI oil jump by 3%, extended its gains further this morning to $47.85 a barrel. That's the 1-week high. This hasn't benefited the Canadian dollar, though. We saw USD CAD fall only briefly yesterday at that initial surge in oil prices, and we saw USD CAD reverse those falls and head higher again this morning. And the reason why the Canadian dollar has been falling against the US dollar is because Moody's rating agency downgraded its credit rating for 6 of Canada's biggest banks, and that's raised some concerns about the financial sector in Canada. So that's why USD CAD is back above the 1.37 level. Looking at today's economic calendar, it's going to be a busy day, and apart from the Bank of England, we're going to have other UK data. We've got industrial output, manufacturing output as well, and UK trade data as well. In the US session, we're going to have the weekly jobless claims as well as producer prices out of the US, and of course Bank of England decision and the press conference at 11:30 GMT. That's it from me. Thank you very much for watching, and have a great day.